Hey there, and welcome to the real estate scene. I'm John Doring, founder of Scottsdale Living, your insider's guide to all things Scottsdale and beyond.
And I'm Courtney Latchaw. I bring a sharp eye for details and passion for connecting people to their dream homes.
I'm Stephanie Troy, and I'm all about negotiating the best deals and helping people turn their real estate dreams into reality.
Whether you're a first-time buyer, a seasoned investor, or just here for the juicy stories, you're in the right place.
Think of us as your real estate guides, showing you the fun, the facts, and the future of the Phoenix metro market.
So grab your headphones, your coffee, or your favorite beverage, and let's get started.
Welcome to the first episode of the real estate scene with John Doring, Courtney Latchaw, Stephanie Troy, and our guest today, Tim Regan. And we're not going to call him Reagan because we've already talked about this whole thing. But this is our first podcast doing the real estate scene. It's going to be a ton of fun. We're going to have a great time. We're really going to help educate you about a lot of the stuff in the Scottsdale real estate scene, as well as the whole Phoenix Metro Valley. Okay, so we're talking to Tim today. Tim is a lender. And what company you work for, Tim?
Western Mortgage.
Western Mortgage.
Yeah.
So rates, man. Everybody's talking about rates, right?
Yeah.
What do we think? Going up, going down? What's the crystal ball say?
You know, if you'd asked me 2 weeks ago, it would have been a different answer. 6 weeks ago would have
I
been
feel
a
like
different
that's
answer.
always it,
Yeah.
right? It's
Yeah.
just like peaks and valleys.
I think based on what we know now, rates are probably going to stay about where they're at.
Sure.
At least the first half of the year. I don't expect any big volatility way up, way down, but I don't see it. A lot of people are expecting rates to be back in the fives here pretty soon after what happened in September. And
Sure.
I think we've realized that's probably not happening. It's going to happen later rather than sooner.
Yeah. And so, I mean, what do you see as a balanced market? I mean, is 5 fine? Is 6 fine? It's the new norm?
You know, people ask me that a lot, and you'd be surprised how many people were qualifying even when rates were up to 8%.
Sure.
You know, is it great? Do people love it? Is the affordability, does it feel good? Obviously not as good as if rates were in the low sixes or into the fives, but there's still a need for home buyers to buy. People are moving, divorce, children, all these life things that are happening. So, you know, rates are going to be what they're going to be. It'll be part of the market, but what will really continue to drive it are the family needs that come up, job needs that come up, and Scottsdale is obviously a great landing spot. Our county's the fastest growing county in America, so
Isn't it crazy to think that would we ever have thought that?
No,
Right?
No.
It's nutty.
No.
And I think we won some kind of award yesterday, right? Scottsdale is
Did
like one
we?
of the most livable cities or something in
Oh.
the world. We'll throw that graphic up there so you guys can see it because I'm not crazy. Can you throw me the line?
No.
Give me the line. Date the rate, marry the house. Is that what it is? I'm sick of hearing that.
Yeah.
Oh my God.
So-
Now we feel bad about saying that, right?
Yeah.
From 2 years ago.
I've said it from the beginning. I don't like that saying.
Yeah.
As somebody who worked through the crash and the
Sure.
great financial recession and all the subprime loans that were given out, oh, don't worry, you can refi later, and all of a sudden you couldn't.
Yeah.
It's a little triggering for me to hear that, but at the end of the day, again, you know, rates are going to be what they're going to be.
Right.
Home buyers shouldn't be making their decisions solely on rate.
Sure.
Monthly payments way more important. You know, buy based on your budget, not what the rate is. And you know, nowadays where you got sellers contributing, and you can do things like 2-1 buy downs or permanent, you know, where you can buy your interest rate a little lower to create the affordability. There's options out there.
Sure.
You just have to, you know, you just want to stay within your budget more than anything.
Yeah. So girls, like, what is your approach when you're working with a buyer, right? How do you negotiate? I mean, are you looking at point buy downs? Are you looking to get concessions back to bring down rates?
Absolutely.
Yeah, absolutely. Almost every single purchase contract that I write, we ask for the seller to contribute towards closing costs or concessions for our
I think
buyers.
it's just the norm right now.
It should be, right?
Yeah,
Absolutely.
absolutely. I mean, right now I'm working with one that got 4%.
Wow.
Yeah.
That's crazy.
Right.
So was that an assumable, or they're straight up new loan 4%?
Straight up new loan.
Wow, that's crazy. Is that Tim's loan? Or can we...
No.
Oh man.
Yeah.
Sorry, Tim.
You
Under
know,
the bus.
assumable loans.
Gonna wrap you
Yeah,
out,
I mean,
please.
assumable loans is another thing that has helped with affordability. Government loans are assumable, so any property that has a government loan, FHA, VA. You don't see a lot of USDA around here, but any government loan can be assumed, meaning a new buyer can take over that mortgage and mortgage term. That's helped create some affordability. At the end of the day, again, it's the family needs are more important than anything. And some houses it makes sense to do the something like an assumption. Sometimes people don't have the money to bridge the gap, because when you do an assumption, you can only take over what's left. Right. So if there's a big chunk of equity, people got to come in with the difference. But listen, our industry, we all know, we've all been doing this long enough. The only constant has changed. So we'll be talking about something new in a month. 100%. And Scottsdale real estate's like the proving ground for every real estate trend. So
you know what? It totally is, right? Even with tech, right? I mean, these guys come in and flood the tech, open door, offer pad, Redfin, they all come in here and drop the tech stuff on us too. And it's like the Z estimate, boy, that thing worked out really well. It was like fantastic. They could nail the price on houses like crazy. Yeah. But a cool thing that we should probably chat about is I have this conversation with my buyers all the time. And I'm sure you guys do too. It's like having that relationship with your lender is really, really important, So
100%.
Yeah. I mean, you get a buyer that comes to you with we're going to throw them under the bus, a rocket loan, right? It's like, where's the lender at? When can you talk to him? He's only on the phone. You can never get a hold of him. There's no relationship. It's
or they're
like
passing it off, right?
100%.
It's not the same person 100%. Working the loan. That's what I think is the most frustrating.
Right. So it's always, at least for my end, if I can connect our buyers with the local lender like Tim, it makes the whole process so much easier.
Totally agree.
Yeah, it's a good way to move forward for sure. So coming back to Scottsdale, what's the hot loans going on right now in Scottsdale? What are you seeing?
Yeah, Scottsdale specifically, there's a lot of markets where you're still doing a lot of jumbo loans. Sure. But the 2-1 buy downs, where it's a temporary buy down, which just simply means the sellers, you're finding the right dance partners, I like to say, who's going to help create your affordability with you, where they're doing a 2-1 buy down, which just means that your interest rate would start 2% below the market for the first year, goes up 1% the second year, and then stays at whatever the market rate was the 2 years before. The 2-1 buy downs, 3-2-1 buy downs are very popular. There's not a whole lot. I don't see a lot of ARMs anymore. It's just not an appetite out there for them, both by consumers and on the back end of banks wanting them. So it's Scottsdale specifically is more jumbo and a lot of 2-1 buy downs, traditional, conventional type stuff, a little bit more vanilla type financing happens here. Also, Scottsdale is very big on entrepreneurs too. So it's a huge entrepreneur hub. So I do run into those things like bank statement loans or with the, investing in Scottsdale and Airbnbs and things like that. Some DSCR where you're underwriting a deal based on whether it makes money year over year, month over month, year over year.
Do you think that in 2025 because you've been a lender for a long time, do you think that there's more entrepreneurs now than there ever has been?
I think the gig economy is very real, and I've yet to hear somebody truly articulate its impact on the economy and housing. Yeah. Because there's so many ways you can make money here. Yeah. I've done loans for people, right after COVID, where they had 2 full-time jobs, plus we're driving Uber and remote work is totally changed.
Is that really tricky for you as a lender? For like pre-qualing and all of that, like when they are, an entrepreneur and a newer one,
self-employed.
Yeah.
Yeah. Self-employed is a little bit different, right? You're going based off the reported income on taxes and how much they wrote off. It's definitely a little bit different. But at the end of the day, it's communication. Yeah. You don't want to create unrealistic expectations for anybody. Right. And having a good call and you guys as agents doing a good job of understanding what their needs might be. So as the introduction happens, it's not like, oh yeah, we're gonna buy a house, and then it's like, and then
no, you're not,
and then I'm the guy who puts the pin in it.
We're looking at apartments.
Listen, it's already, as lenders we joke and say, you guys sell the dream and we sell the reality.
It's totally true, though, right?
So, what's the typical down payment for somebody who is self-employed? Like, what do you think the average down payment is?
Yeah, so on anything that we would call non-QM or off traditional of like a standard 30-year fixed, you're usually going to need at least 10% down.
Okay.
At least.
Yeah. Talk to us a little bit about PMI, right? So I think it terrifies a lot of people.
Yeah.
And if I remember correctly, like FHA doesn't drop off anymore at all, right? I mean, it's stuck with the loan.
So with FHA, if you put 10% down or more, it'll fall off after 11 years.
Okay.
But it's on there for 11 years.
Right. Right.
I think PMI is very overblown.
Okay.
If you have good credit, you can buy a home with 3% down and have no PMI ever.
Okay, cool.
So there's a ton of options out there, and especially in a market like we have now where you do get seller concessions. Because look, at the end of the day, there's a cost to not have PMI from the beginning. But if a seller's paying for it, then maybe it makes sense.
Right.
And like I had a conversation with a client the other day, and they're like, oh, we have to put 20% down. Their PMI was $38.
Oh,
and I was like,
yeah.
I mean, do you want to put another 80,000 down or
pay $38?
Yeah, I mean, it's
I would
one trip to Starbucks, right?
Yeah.
It's crazy.
Yeah, I mean, if you have good,
make it 40.
Yeah,
Give me 40.
Yeah.
All right. I want to give you 40.
if you have good credit, you know, PMI isn't the end of the world.
Sure.
It just it has such a negative connotation to it. And look, it is not there to serve the homeowner.
Right.
It's there to serve the lender.
Right.
So I understand why people feel that way. But it's like cutting off your nose to spite your face sometimes. Sure. It's a means to an end. And even in FHA, where in most cases it is forever, FHA is still sort of a stepping stone loan. If you can just get in, start home ownership, and then down the line you build some equity, pay the house down, credit gets better, maybe then you refinance and not have PMI later on. Yeah. Nobody who's buying right now is going to have their loan for 30 years. Sure. So
not going to happen. Totally.
I can hate the marry the house date debate all I want, but it's kind of it is kind of the playbook over the next 5 years for sure.
Yeah. What are you seeing with first time home buyers? Because I mean, one of the things I think that, and I'm sure you girls probably agree, is like they freak out because they don't understand cost, you know, going into the deal. It's like, oh, I've saved my 3%. It's like, that's cool, but you're going to need another 10 G's, right? So, I mean, what's that conversation and how do you kind of like prep them for it, you know?
Again, it all starts with communication.
Sure.
Yeah. I mean, I try to go through it with people as meticulously as I can. Big word. Big word for us Scottsdale folk, right? But it's true. I mean, a lot of people, there's so much information out there that sometimes people are like, oh, can't you do this? I'm like, well, in this one specific scenario, right? Yeah.
Oh, totally.
Yeah.
It's not so much the misinformation, it's how the information applies to you specifically based on what you're doing. The way your mom bought a house, your sister bought a house, your best friend, it's their situation is not your situation. Right. So it's creating a good communication to make them understand this is how these things apply to you and in your journey to home ownership. And it's just communication and conversation. People, one of my good friends always says they can handle the truth. They hate surprises. When it comes to buying a house.
Yeah. I mean, in a selfish way, one of my favorite things is like, I'll get a first time buyer and they're like, oh yeah, I've got 3%. It's like, boom, we're buying a house. Talk to Tim. I'm out of this thing. The conversation is between you. You can be the bad guy. I'm out showing them cribs. Here we go. It's all good. Yeah, you're gonna have to work some overtime, but talk to him about it. It's right. Not my deal.
And I mean, you know, let's just rip the Band-Aid a little bit. You know, now with some of the NAR changes, it's a different conversation on your guys' side.
Right.
You know, I'm curious how you guys also preface that conversation.
Oh yeah, just sign this contract. It's all cool. Right? Never met you before. No idea who you are.
You've never read a contract before. Why start now?
Right. 100%. And no, it doesn't.
It's a lot of pages.
I'm just going to send you something to sign.
Exactly.
Yeah.
Just click. It's all cool.
It's fine. It's easy. It's DocuSign.
Read at the beginning and just click away.
And yes, we are working together for the rest of your life, along with every family member on anything you ever look at. You know, if I'm going to buy a Ferrari, I'm in on this.
I've just been added as beneficiary to all of your.
Exactly. Yeah. I saw you were spending a little much at Starbucks last week. Let's slow down there. Right? No, it's a hot mess. You know what? I mean, I probably can't say that, but whatever. I'm gonna say it anyways. You know,
I think we're all just trying to figure it out. You know, it all happened so quickly.
Right.
And I think even the higher powers didn't know exactly what was going on. So we're all just like, oh, these forms. Okay. These forms.
Yeah.
So, I mean, it's just, we're educating ourselves while we're doing it.
And every buyer that we have has some sort of misinformation, I feel like, that they have read or heard from, you know, someone else who's bought a home or their grandma or who knows.
Yeah.
So
their parents are like, don't sign anything.
Yeah.
You're going to sign something. Right?
Yeah, exactly.
You're not going to see a house, you know? It's like,
I think one of the things, I'm used to it now, but coming from Chicago where it's an attorney state, you know, and we do get a lot of, you know, Illinois transplants.
Sure.
You know, like, who's my attorney? I'm like, oh, you don't actually need one here. You get to make all the decisions on your own.
It's like,
I got this.
So it
just
does
sign this.
Yeah, exactly.
It does put a lot of, I don't know if I'd call
honestly,
it pressure.
you're really way more professional than that, right? It's like, it's a joke. I'm just kidding, folks. It's all good.
Listen, if you can't laugh in this industry,
totally.
You won't last long.
Yeah, 100%. 100%.
But it does put a little bit of onus on you guys.
We are taking our CE classes.
Yeah, exactly. We are very educated.
We are educated.
Yeah. Sit there and look at the screen for 60 minutes, click next, right? You know, the one thing I think it's thrown for a loop, right, which kind of bothers me, to be totally transparent with you, is dual agency. Yeah. You know, so now you got a ton of buyers going direct to the listing agent because they think they're getting a deal. And depending on what the listing agent did, you're not getting a deal. And it comes up more and more often, right? And to me, and again, NER, whoever's listening, you screwed up because the buyer's losing their representation. You know what I mean? And because that listing agent works for the seller. I don't care if you sign a dual agency or whatever, and what you're supposed to do. I totally get it. But at the end of the day, that's their relationship is with that seller, right? So you're pushing a buyer. Is kind of like nobody's holding their hand, you know?
I totally agree with that.
Yeah, it's a scary thing to see. And it's hopefully there's a way to, you know, figure it out, right? Kind of grow
and YouTube University really only gets you so far.
Yeah, 100%.
It's the truth, like, especially for a first-time home buyer.
Yep.
I mean, there are things that come up, you know, on every deal. There's so few deals that are like, oh, done.
Right.
Like there's, whether it's the appraisal, the inspection.
There's always, it doesn't matter how long you've been in the industry. There's always something that's going to come up that has never come up.
Right. It throws you for a loop. You're like, oh my gosh, what just happened?
So like Stephanie and I, we have done a mentorship program for our brokerage. And, you know, we get mentees that want us to basically tell them how to negotiate deals. Sure. And we're like, there's no script for that because everything is different. Just like what Tim said, even with like an appraisal. I mean, you're never going to get the same scenario.
Ever.
That's just the way it is.
Yeah. It's kind of wild, the number of sellers that will freak out over an $800 house, right? It's like, dude, this is a $2 million house.
Right.
You know, let's take it in context. I mean, it gets a little crazy sometimes, you know?
Yeah. I think the biggest thing when it comes to buyers, I really harp on finding the right dance partner. I don't care about the house.
Totally, right?
You know, there's going to be other houses. You really want to try to find a happy medium of house, selling agent, and seller that you can work with to make the process easier. Because sellers can be hard, you know, because they don't understand, and in some cases they have to squeeze every nickel out of it. Because they've got other things to do, or you know, I have some attorneys that refer stuff in family law things and divorce and bankruptcies and things like that, and you know, sometimes it's a lot of pressure on both sides. So finding the right dance partner is so important and trying to have a smooth
I love
process.
That, man. I love you say that, right? Because I mean, how many agents are in Maricopa County right now? Like 17 million, something like that. It's like an insane number. It's like
sounds about right. I was like, I had to think about that for a second.
Literally every single person seems like they have either gone to real estate school, they want to go to real estate school, their parents are realtors. Like,
100%. Yeah. Thanks for coming to my yoga class. I'm ready to sell you a house. You know? And it's
totally.
Just, you know, and I mean, like we sit at this table, this is what we do for a living, right? This is how we pay the bills. And it drives me crazy the number of people I see come to, you know, to a listing or that I'm working with, and their agent was a referral from grandma or from mom, or it's their, you know, my dog's groomer's sister's brother-in-law, and he just got into it and he's a rock star, but he also works during the day for Taser, whatever, you know, and it's just a hot mess, right?
I know, I really did a long time ago.
Did you really?
When they first started.
Yeah. Did you get any free product?
Nobody did get teasered.
Oh, did you really?
I did.
Did you really?
At Chandler PD. I did.
Oh my gosh.
Voluntarily.
Wow.
Sorry, this is
Don't
a whole other conversation.
No gracias.
Wow.
Things you wouldn't do again. Go.
Yeah.
Well,
So let's think about this. Buy a house with Courtney and you can tase her.
No.
It's got to be over $1 million.
Do that.
I love the marketing. I love the marketing idea.
Right?
That, yeah. I love that.
For $1 million house, you can tase me. I'm just throwing it out there.
I won't
right?
tell you how long ago I worked there, because then that'll tell you how old I am.
Yeah, that's a cool place, though, right? I mean, obviously this is a real estate show, but it's also something about Scottsdale. So that's a hot mess right now, is with the new headquarters and 27,000 apartments they're building with it or whatever. But, that's just more real estate going on. Scottsdale's obviously developing and stuff's going pretty crazy, right?
I mean, we're a stone's throw away from Old Town. And I don't get down there as much as I used to. And I was down there for an event. I was like, I thought they just completely redid all this.
Yeah.
What are they building now?
Right, but that's how it is everywhere in Arizona. Everywhere. It's like exploding.
Mm-hmm. Yeah, I mean, just like the 101 in Scottsdale Road, right? I mean, that's a new Optima going in right there. And
crazy.
Oh, yeah. I mean, you seen the price points on that stuff? It's insane.
The price points anywhere.
Yeah.
People are like, oh, I need to buy a home in Maricopa. Well, it's still going to be $400,000.
Yeah. And we're going to drive an hour and a half, right?
Yeah. To be able to afford stuff. And now that's just.
Yeah. The affordability factor kind of stinks, right? But I mean, so what do you guys think? If you've got a first time buyer, they make 80 grand a year, they can pay 450 G's. Where are you taking them?
Maricopa still.
Yeah.
Casa Grande.
Yeah. I mean, anywhere that they can get a single family home if that's what they want. And that price point. And it's going to be on the outskirts.
Right.
I remember back in the day when you could go to Surprise or, out west, but you just can't do that anymore.
Yeah. It's nutty.
Yeah.
What do you see in first time buyers? Where are they buying at?
The term is drive till you qualify.
Yeah.
I think
no, that's true.
It's true, but
yeah.
I like that one. I've never heard that before.
I know. I haven't either. I'm like, should we get t-shirts?
Yeah. I mean, I do see a lot of West Side. I definitely see a lot of Queen Creek. Queen Creek has exploded. Although Queen Creek does have some real.
There's some pricey stuff out there in Queen Creek.
That I feel like is exploding a little bit too.
Yeah. New River's another one. There's pockets of Phoenix. A little bit older homes.
Sure.
But it's a lot of West Side. That pockets of Phoenix, and then Southeast Valley, Queen Creek, Santan, South End of Chandler.
Right. I mean, it's a battle in Scottsdale, right? Because I think this morning, if I remember correctly, there was 3 houses that were under 520 grand. It's a 3 single family residential under 520 grand in Scottsdale. It's like, that's insane. And you don't want to live in them.
I was just going to say they're probably yellow taped. But...
Yeah, exactly. So the affordability thing's crazy.
Crime scene.
Yeah.
just like taped bodies.
Exactly. The chalk outline. You know what? We're gonna wash that right off.
But it's all under 500,000.
I did hear gunshots last night.
Roll them up.
Fireworks. It's all good.
I didn't really hear gunshots.
Can't get in there till PD shows up.
Exactly right. Yeah.
But it's for sale for $520,000.
Exactly. Let's wait down the block until we can go see this one. We need a few minutes.
I have a question.
Shoot.
Because this comes up. Where does North Scottsdale start now?
So it can start,
we created Arcadia Light out of thin air. So I'm wondering if there's like a North Scottsdale Light.
You know what? I think it's totally based on how long you lived here.
North Scottsdale Light.
Right?
Yeah.
Scottsdale Light.
That was like the Optima area over there in Scottsdale in the 101. Because it's really Phoenix.
What would you say? It used to be for sure north of Shea.
Did we just make up our
now is it?
I would consider that Central Scottsdale, honestly, anymore, right? I mean, it's like Gainey, Shea, Cactus Corridor. Because I mean, you got another 20 miles to go, right? I mean, until you hit the end. I mean, you go in Troon Plus. So there's what is Troon? I mean, that's Scottsdale, but that's north. That's the North Pole of Scottsdale, right?
Yeah.
So to answer your question, I have no clue.
It's
we're just gonna make it up.
I know. I'm like, let's just make this up. Let's pen it on the map.
100%.
Right,
we're gonna call it today.
Right here.
You heard this. You heard this live right here.
John, you call it. Where does
let's call it Frank Lloyd Wright, but not Bell. Okay, so we're just going Frank Lloyd Wright.
Yes.
North of Frank Lloyd Wright is North Scottsdale. Below that is Central Scottsdale.
Yeah.
But then where's South Scottsdale? Is this are we in South Scottsdale right now, or is South Scottsdale start a little bit further?
I always just call this area Old Town Scottsdale.
Yeah, that's just what I refer to it.
Yeah.
Totally.
Yeah.
So let's throw you for a curveball real quick, because this comes up all the time. Condos, right?
Oh.
So I get a ton of, especially first-time buyers or, new buyers, whatever, 30, 35 years old, young professionals. I want to buy that condo. Like, yeah, no, you can't, right? Because it's not going to get a loan. So what does that look like? I mean, how does that happen?
Specifically here in Scottsdale, financing on condos and really all over Phoenix, but financing on condos has become really difficult for a couple of reasons. A few years ago, you guys remember that collapse in Miami that totally changed lending regulation around lending on condos for Fannie Mae and Freddie Mac. So it's become more difficult. But here in Scottsdale, because there are so many snowbirds and lock and leave type people and people who rent out or try to Airbnb, etc., it's hard to get financing if the entire condo unit is rented out.
Yeah. And that's because the government doesn't want that, right? I mean, there's got to be a percentage of people that live in the condos, not rent it.
Correct. It's all, at the end of the day, not to be a nerd here, but it's based on risk. People who live as a primary residence, meaning they live there, that's where they live full time, they're more apt to pay their bills, pay the HOA dues, etc. People who are renters or rent
second
homes, that's not as big a on their priority list, right? Like, and so they worry about HOA dues and maintenance not being kept up, and deferred maintenance is a big thing that keeps coming up with condos. If it were me, man, as much as I can, whenever I get condos, I actually research a lot of condos, to be honest, because back in the day, almost everybody was FHA approved. I mean, coming out of the crash, FHA was really the only lending game in town, and so a lot of these condos were forced to get approved,
play the game, right?
Department HUD, right? And now that's kind of subsided, and it's made lending on condos even more difficult. But
at the end of the day, that's on the HOA to qualify there, right? Yeah.
Correct. And it's just some documentation, but one of the bigger pieces are you can't have more than 51% as non-occupant units in the complex. So, I would put the onus on the HOAs to do what they can to try to stay within FHA.
That's kind of on them, right?
Yeah, it's hard. It's hard here in Scottsdale because there are so many snowbirds, and I get it. You're not going to get everyone, but I think people are underestimating the back end resale value, because I don't think it's going to get any easier lending on condos. You got to think. I mean, you have a collapse of an entire building. The lawsuits on that, I'm sure, are still going, and that's going to continue to impact. They just increased insurance requirements for Fannie and Freddie. So condos can be tough. If you are a condo buyer, have patience. That's the best thing I can tell you.
Yeah, you know what? And I'll throw this out there. If you're a condo buyer, they're falling down in Florida and they're on fire in California. So come to Arizona. Right? It's
we've got condos in Scottsdale.
100%. Yeah, you can't get a loan on them, but they're not falling down and they're not on fire. So it's like,
and I think the other part of it, just from affordability, $150 to $300 for an HOA, that's going to equate to a whole lot more house. Whether it's a townhouse or a single family home, it's almost better to buy those when you can.
Totally. Yeah, it's really challenging sometimes, right? Because you get that buyer that just doesn't get it. You know what I mean? They're like, I want to live there. And it's like, you just, unless you got 450 G's cash laying around, we're just not doing it. It's hard.
I mean, there are some complexes that are cash only.
I mean, there's quite a few around Scottsdale.
So what's the workaround? What's the solution outside of cash? I mean, is there any tricks that sometimes you can use to get into condo finance?
I mean, there are what's called non-warrantable condo programs. Usually you're going to need 25% down. The rates are going to be higher. So the terms aren't as good. And some of them, based on what's going on in the condo, whether it's a, litigation. I've seen a bunch that have litigation, or some that are like 90% rented out.
Maya. Totally.
The other thing too that comes up here is a lot of people post crash bought bulk units. So you can't have one owner's got 20. Got a huge percentage of a complex, which makes it harder. So there's options. They're not as favorable than if you maybe tighten the budget and use those funds to just buy a little bit more of a house versus a condo. There's always option. I'm a firm believer where there's a will, there's a way.
Sure. Yeah, absolutely.
It's not if buying a home with a 30-year fixed mortgage feels unaffordable, being required to put 25% down and then pay 8.5%, 9% rate on a condo
and then,
doesn't feel good either.
HOA.
And then you got to worry about resale and what if more people buy in as investors?
And your neighbors in Airbnb and got a whole bunch of stuff going on for sure.
Yeah, and at the end of the day, all it takes is one person, really, one or two people to foreclose or like completely undercut the market because price per square foot is price per square foot.
Yeah, absolutely. Are you seeing foreclosures creep up a little bit?
Not a ton, no.
Okay, good.
No, I'm a firm believer that government, this is my conspiracy theory, they'll never let the housing market stand on their own 2 feet again. I think COVID really taught us that they at this point they own 90% of the market. If the real estate market crashes, we're going to have way bigger problems than the price of a house.
I agree with you. Yeah. Were you a lender during the market crash in 2008? Okay. Yeah. Were you in real estate as well?
I was not.
Okay.
Yeah, I was not. I think I got into 2012. Yeah. So right after that.
Okay. Got it. But
were you at the time?
I was. Yeah.
So
I've been licensed since 2006. That was a disaster.
Yeah.
And I remember looking online at condos in Scottsdale at the Optima right over here by the mall. And they were like $70,000 to $90,000. Can you imagine that right now?
What do those sell for now?
Oh, yeah.
Upwards of $1 million.
7,
yeah.
You get a studio over there for 500 G's, right?
Yeah. But then you've got really hefty HOA fees on top of that.
Yeah, totally.
So so those are not.
But I mean, if you got in at 70,000.
Yeah, totally right.
That might be okay.
Winning all day long.
All good.
Still.
On that note, you should have bought in 2009. So this is the real estate scene. This is our first one. It was killer. Had a great time. Thank you, ladies. Thank you, Tim.
Thank you.
Tell everybody how to get you. How do they get a hold of you?
Yeah, you can find me anywhere on social. Tim Knows Loans, Instagram, TikTok. Everywhere.
And he'll be your best friend.
Yeah.
He will.
DM me, email.
Can I just give you a little plug really fast? Okay, so I've actually had 2 homebuyer clients with Tim, and our transactions have both been fantastic.
Thank you.
Yeah, absolutely seamless and fantastic.
Rock and roll.
Thank you.
Thanks for being the guinea pig on the show.
Yeah, no problem.
Thanks,
I love being the first of anything.
There you go. Rock on. Thanks, folks. Killer day.
Thanks.
The real estate scene is brought to you by Scottsdale Living.
If you have questions or topics you want us to cover, send us a message.
Don't forget to subscribe and join us every week for the Inside Scoop.
Thanks for tuning in, and we'll see you next time on The Real Estate Scene.